we see all this growing competition here in the US, and obviously we're at a more mature stage of their business here. But when you look at the opportunity outside the US, the competition's much less severe, and the opportunity is just much bigger, especially as we move from what has been a largely in-home television product to a much more mobile, out-of-home product.
How does all the media consolidation change your outlook? You have Comcast buying Sky, enabling them to do more direct-to-consumer internationally. You have Disney, Fox, bolstering what's going to be the Disney direct-to-consumer options. We have a Disney app launching in about a year. Does all of that consolidation change your perception of this?
You know, it really doesn't, because if you look at what Netflix is spending on content, and even make the comparisons to what, you know, those media consolidations are spending on content, there's no one that's getting to the level that they're at. There's no one that's getting to the level where you or I as consumers are simply going to say, you know what, this is good enough, I'm going to cancel my Netflix subscription for this. A lot of us are going to have multiple subscriptions. You'll subscribe to Amazon, you'll subscribe to Netflix, but as long as Netflix wins that value battle for what you're spending versus what you're getting, they're going to keep winning at this.
That may be the case in a developed market like the US, where things are pretty stable. The growth isn't as astronomical, or isn't as bold as internationally. But when you take a look at winning share or winning consumers, winning new customers in new markets, how important is the economic outlook? And if we think that there could be a slowdown overseas, could that, even at the margin, impact the growth rate at which they can expand internationally?
Sure. At the margin, that could have an impact. And I think that's the difference between sort of what we're looking at shorter term, and things like rising rates matter, and the cycles that we go through will certainly matter. We're looking at this a little bit more long term. Can they get to 300 million subscribers? Can they get to 400 million subscribers? What does that path look like? What does the ARPU look like at that point? Because that's where the profitability of this matters, and I think that's where opportunities like being down, not that 15% is that attractive, but when the stock does pull back, you have to pay attention to the longer term piece.
Heath, do you think they stay pure subscribers, say outside the U.S., probably in the U.S., but there's so many opportunities in these developing markets to work with partners in ways that could bring them, if not direct advertising income, perhaps some extra sweetener from what somebody else is doing. Do you expect that to open up as a potential revenue stream, or no?
I think it's unlikely. I think they have sort of almost a religious point of view around subscription being a superior model to advertising for the type of content that they've got, especially for their creators. You look at the pull that they've had for really high-level, big-name creators, the flexibility that comes with that versus having to build your content around 8 minutes of commercials every 30 minutes is something that I think is a big advantage for them. And I think the trade-off that we make as consumers of our time versus our attention for advertising, being willing to pay $8.99 to avoid having to sit through those commercials, is something that's really appealing about this product.